Welcome to The Explainer. Today we're going to talk about something that scares just about every investor out there. What do you do when the economy tanks? Well, here's the crazy part. What feels safe is often the most destructive thing you can do. And what feels absolutely terrifying, that could be the single biggest opportunity you'll ever get. So check out this number, $67,000. Now, what is that? That's what a mere 10 grand would have turned into if you'd invested it on March 9th, 2009. We're talking the absolute rock bottom, the peak of fear during the great financial crisis. By early 2024, boom, 67 grand. That's a 570% return. And get this, it didn't come from some crystal ball. It came from having courage when everyone else was running for the hills. And that brings us to this idea right here, which is really the key to everything we're talking about today. Recessions don't destroy wealth. They transfer it. I mean, think about that. This single sentence, it explains everything. It's why some people get wiped out in a downturn, while others somehow build massive fortunes. It's this giant, historic transfer of wealth, and it's happening right in front of us. Okay, let's dive into that. So how do we make sure we're on the right side of that transfer? Well, first, we've got to get into the psychology of it all. The myths that trip most people up. Because here's the secret. Having a solid plan is way, way more important than trying to predict what's going to happen next. Right. So the big question isn't if you should invest, it's how. And that how is where everybody stumbles. It's not like we don't know the basic rule, right? Buy low, sell high. We've all heard it a million times. The real issue, the real problem, is our own brains. They're literally hardwired to do the complete opposite when things get scary. And that leads us right here into the psychology of panic. You see, when the market is crashing, your biggest enemy, it's not the economy, it's not some failing company. Nope, it's that ancient survival instinct that's buried deep inside your own head. Yeah, we're talking about the lizard brain. That part of you that just screams, danger, run! It was awesome for, not getting eaten by a saber-toothed tiger. But when you apply that same run for your life feeling to your investment portfolio, oh man, it becomes a total wealth destruction machine. It's what makes us sell low right at the bottom and then wait to buy back in until all the easy money has already been made. And look, this isn't just theory. This chart shows you the cold hard cash cost of that panic. There's this famous long-term study by Dalbar, and what they found is just wild. The average investor, regular people, makes way, way less than the market itself. And why? It's simple, really. They let fear make their decisions. They sell when things get ugly and completely miss the ride back up. So that fear, it pushes people towards what seems like the logical choice. I'll just wait. I'll sit on the sidelines until things look better. But here's the thing. That is a trap. A huge trap. Trying to time the market to perfectly catch the bottom, it's a fool's game. It just doesn't work. And this timeline from 2020 is the perfect example of why. It shows this huge disconnect between the stock market and what's happening on Main Street. You got to remember, the market is always looking ahead. It's a forward-looking machine. Back in 2020, it hit rock bottom and started this massive recovery months before the news about the economy sounded even a little bit positive. So think about that. If you wait for the good news, for unemployment to drop and for the headlines to be all sunshine and roses, you've already missed it. You've missed the most explosive part of the recovery. The biggest, fastest gains, they always happen when fear is at its absolute peak. Okay, so if timing the market is a bust, then what are you supposed to do? What's the actual plan? Well, that brings us to the Recession Investor's Playbook. And this isn't about having a crystal ball. It's just a simple 3-step plan to systematically and calmly take advantage of all that chaos. All right, rule number 1, automate your buys. Set up automatic investments. It takes your emotions completely out of the driver's seat. Rule 2, hunt for quality. This is not the time for speculative bets. You want rock-solid companies with strong finances that you know can weather the storm. And rule 3, keep your dry powder. That just means having some cash on the side, ready to go. So when those amazing, high-quality companies go on a massive sale, you're ready to pounce. Now, to really see how powerful this simple playbook is, let's look at a tale of 2 investors. We're going to follow them through the 2008 crisis, and you'll see clear as day the difference between having a plan and just giving in to panic. Okay, so on one side, you've got the panicker. This person watches the news, sees the scary headlines, and just freaks out, sells everything near the bottom, and then waits years to get back in when it feels safe again. And on the other side, you've got the recession investor. This person follows the playbook. They stay invested, and even crazier, they add more money right when things look their absolute worst. And the results? I mean, they're not even close. They're staggering. Fast forward to 2024. The recession investor ends up with more than double the money of the panicker. Double! All they did was stay the course and buy when everyone else was selling. That discipline, it paid off. Big time. So let's wrap this up. What's the big takeaway? A recession, it's not an if, it's a when. It's just a natural part of the economic cycle. So the only question that really matters is the one on your screen. The next time it happens, which side of that wealth transfer are you going to be on? Are you going to be prepared? Prepared to see it not as something to be afraid of, but as what it really is, the single greatest wealth building opportunity you might ever get.